today. First up, let's talk about the yellow metal. Now, gold, it's hovering above that $4,000 mark today. It's up initially, it was absolutely flat, but trading with a positive bias. But now it's up almost 0.7%, above the $4,000 per ounce level. Now, let's look at some of the factors that are at play as far as gold is concerned. Now, China, that has ended rebate for some retailers. Now, this move may reduce local demand. So that's keeping, some cautiousness over gold buying that is there. Instead, the frenzy has cooled down after record high sentiment that we saw over the past few weeks. In fact, that has weakened as China is a key market as well. Central bank buying, safe haven demand, they are sort of offering support. So yes, gold is holding on to its decline that we saw last week, but still holding above that $4,000 per ounce level as of now. But now let's also talk about gold, which is actually recovering as far as prices are concerned. WTI, that's holding above $61 per barrel, whereas Brent, that's holding above $65 per barrel. Now, this, of course, is on the back of that OPEC Plus meeting, which is in focus. Now, they've decided that the December output will be hiked by 137,000 barrels per day. However, for the Jan to March period, that is the first quarter of calendar year 2026, any output hike has been paused. So yes, that's the reason why gold prices are recovering today. Some of the other factors that are at play for gold is, of course, the optimism over US-China trade talks, especially. There's oversupply fears after a 2.9 million barrel per day hike since April. Now, apart from that, there's also sanctions on Russian oil companies that's weighing on the oil sentiment. So yes, so far, all good as far as both gold and oil are concerned, both witnessing an uptrend today. But to discuss more, what's the outlook going forward and where could the prices be headed by the end of 2025, we are now joined by Peter McGuire, CEO at AustraliaTrading.com. Hi, Peter. Very good afternoon. Thank you so much for joining us today. First up, let's talk about oil. So, OPEC Plus has paused output hikes for early 2026, right? So, do you think by this move, can they control prices with rising non-OPEC Plus supply?
Well, good afternoon, Kanishka. I think a couple of things. First off, yes, it hit a little bit of surprise to the market. Raised December production target by 137,000. As you said, rolling into Q1, that's going to be a little bit of a handbrake. Though, I've got to say this, and that's the caveat. Let's get to January and let's see what OPEC Plus and the G8 are really thinking about, because they can turn on a dime. They've got to be conscious as far as global demand and what's happening with the likes of US dollar and, of course, tariffs. So there are many moving parts to this whole situation, and they can't get too ahead of themselves.
Right. So many moving parts for oil, like you mentioned. But for the first quarter, that is January to March of 2026, they've paused the output hike. But do you think it could come in the second quarter? When do you think the next output hike could come? And if you could give us a price target for oil, WTI and Brent for the 2025 year end?
Well, here we are. Let's look at I'll answer the second part first. Price-wise, we're currently sitting the best part of $65 for Brent and $61.30 for WTI. I feel as though that they'll be softer leading into Christmas than what they are now. So I would say probably mid to high 50s for WTI and Brent probably around that $60 mark. That's a forecast leading into New Year's Eve. As far as whether we're going to see some sort of action coming into Q2, yes, I wouldn't be surprised, because I think there'll be a war for not only price, but also for market share. And that needs to be very much considered. So let's see how this all stacks up leading into Christmas. Then naturally that Q1 period to decipher and to take on board again what the impact's going to be, and then look at where we are for Q2.
Right. So $50 for WTI and $60 for Brent. That's the word coming in. So quite a bit of softening is what we are expecting as far as oil prices are concerned. But Peter, let's talk about gold as well. Now it's holding close to either $4,000 or above that level for now. Do you think any more global cues or data yet to come which could again push the prices higher past this point, or do you think most of the positives are already priced in?
No, I think it was probably, Kanishka, in a lot of ways it was oversold, and it was very, very hot. It was frothy. The market got ahead of itself. It got to 4,400 or very close to it. And then all of a sudden it's red hot. A lot of that steam came out of it, hit down to 39, 39.50, and now it's bouncing back up. It's at 4,025, 4,030. So I feel as though that downtrend, we also had a rate cut last week from Fed, also understanding, are we going to see another one in December with Fed Chair Powell? There's no real clear indication there. You've got the second month that's just starting now for the second month as far as government shutdown in the States, and that's got to be taken into consideration also. So there are many, many components to this that need to really be wrapped up, and I think gold will be certainly much higher than where it is right now at the start of 2026.
And, since we are, Peter, talking about the precious metal space, you did previously highlight there's potential for silver to outperform gold, which did happen recently in terms of the rally that we have seen. Do you still hold that view? What will be the next drivers, if you could give us, for silver?
Well, I think so. It's a wonderful, I mean, they're under, the whole underinvestment across that silver complex has been years, if not decades long. We all understand its unique use as far as technologies. We appreciate that the gold to silver ratio is very undervalued for silver at the moment, and conscious of the big picture, what's going on as far as global demand, and is that going to continue and be aggressive? So yes, I think silver's got its best days ahead of it, and that's a brave statement because it's moved incredibly over the last year. So yes, I think 26 will be a better year for silver again.
Right. Peter, you were just talking about Fed action, that there's still some uncertainty over there. But according to you, what, rate cut timeline could push precious metals higher yet again?
Well, if you do see a rate cut, Kanishka, in December, and that I think it'd be a 70% chance of not happening. But remember, there's a lot of water to pass under the bridge between now and a December rate cut decision time. So there's a lot of things that are live and dynamic in the market. So if you were to see another rate cut, I think that you would see another leg up for gold. That'd give it another kick. And I just want to see what's happening as far as equity markets, where we are with US dollar, and certainly what's the storyline as far as interest rate policy from the likes of the Fed.
So lots to watch out for, Peter. We'll keep connecting with you as and when we go forward and we have more cues coming in. Now, as always, lovely chatting with you.